Welcome to TradeTheNBI.com. This is John. This report is for the 25th of November. We start the short week with the holiday coming up. Nice gap up so far, pre-market wise. We've been consistently with this, cyan under red from way back over here at the beginning of the month, and it's proceeded that way throughout. We've had a couple of little soft periods that we saw when the steel dipped below here, and that caused us to just retrace back into the ABM levels, but also to fill in the positive extremes that took place. Well within expectations. Again, that 3101 is where the ABM yellow sits, which is between the 76 and 100% level, which makes it an easy short below from at least a daily standpoint. Of course, intraday we have a lot more clarity, and we've had a nice reset of the shakeout, and now it's starting to turn itself back up again slightly. We'll see if it's able to maintain that throughout the day, unless there's some major announcement of some kind. I think it's going to be soft. Now, doesn't mean we won't get volatility, because within a soft week you get the B team starts to operate, and they need to make a name for themselves, and they like to throw volatility around, but usually it evens out before the end of the week, and you start December with that predominantly bullish. I mean, they're usually very bullish going into the holiday, especially with everything else humming as it has been. Now, of course, you still have impeachment things going on and stuff like that, but that seems to be muted. The market hasn't bought that since it started. So in fact, we started rising during the whole beginning of all that. And the Nasdaq here, when we look at it though from a DOC standpoint, is a little bit weaker. Yes, we had the same reset coming off with the steel rising, but cyan had been over red, and we knew that and you can see where we barely dipped below the ABM yellow on the S&P or the ES. The Nasdaq here has made it all the way down to the magenta on those retests. It never got to the overbought that the S&P did. So a little bit of rumblings and a mismatch between the two, but nothing majorly severe at this particular point. What would be interesting to see, though, would be a separation between the cyan and the green fading. That certainly would put more pressure to the downside. From a euro standpoint, of course, the rumblings of Brit elections coming up. Looks like we're about to face a retest of the lows, which we expected with the dip below the red line right here. The question will be whether it will happen with the same extreme, whether we'll get a dip below the red line on the retest. If we don't, then we can look for that to be the rebound point. But, this really is a question of, will Brit exit succeed or fail? And it's been all these years. It's not likely to go anywhere. I think it's just going to be more of the same status quo, which is fine for the euro, but it doesn't really do anything for the European bloc as an economic situation, because it's not good. From a oil standpoint, we're not seeing anything on the horizon here. We had that little dip that from a buildup, but that seemed to fade pretty quick, meaning that there isn't an expectation that oil demand has dropped off the floor, which would result in a global recession kind of thing. So that's still being held off at this particular time, and gold isn't doing anything either. So a lot of the systemic risks that you hear people talk about don't seem to be materializing from some of the key factors that we would look at. Intraday, you can see that we were pretty much tightly bound. I mean, the 100% pretty much stayed in with the pre-market high range, and the low test was just a matter of revisiting these dip below right to that same algo level right at 3100, and we just pivoted right off of it, and boom, came up. We got resistance right at the expected 3109 range right there, and then once it broke above, we had cyan under red, and that's what took off, and then that expanded itself. Now we're sitting at support here at the 3117 algo level, interestingly enough. So easy enough to watch that and gauge from there. So all in all, it's good action. It's one of those things where we look for that point where there's been a short capitulation, and once you've achieved that, the new buyers that will be all the short covering won't exist, and then it'll be new money, but with rates what they are, buybacks. It's been enough to propel this, but we expected to be in this years ago anyway, at this range, post-war dividend stuff, something we talked about many years ago, and it's fulfilling itself beautifully right into what exactly we would expect. As always, though, we will put up any charts that are relevant, trade well, and hope everyone's preparing for a great Thanksgiving holiday.